Namaskar everyone, I CA Priya Jain welcome you all. So now in today's lecture we would be talking about the various valuation rules under GST. These are those rules which are used in respect of specific transactions. As we already know that for valuation we usually follow section 15. But section 15 could be used only when two conditions are fulfilled. That is, parties are not related to each other and price is the sole consideration. But there are various other situations which do not fulfill these two basic conditions. Now in that scenario, there are various rules which have been framed by GST. The different valuation rules are starting from rule number 27 and ending up to rule 35. So in my today's lecture, I have tried to cover just the 5 basic rules, that is rule number 27, 28, 29, 30 and 31. So without wasting time, let us move on to the rule number 27. Now, when this rule become applicable? This rules becomes applicable when the conditions of section 15 are not being fulfilled by the person. That is, value of supply of goods or services when the consideration is not wholly in money. Now remember one thing, that I am focusing over 5 points in rule number 27, and these all 5 points are to be considered in sequence itself. That is, in case if you fulfill the first condition, then it is not required that you move to the second point. So in short, the 5 points are open market value, second, total value which includes monetary plus non-monetary consideration, third point, supply of like, kind and quality, fourth point, rule number 30, and then the fifth point, rule number 31. Now what these 5 points denote, that in case if you fall under rule 27, then it is important that for calculating or for determining the valuation of transaction value, you move to the first point, which is open market value. In case in the question the open market value is not available, then you will move on to the next point, which talks about take the total of monetary plus non-monetary consideration. Now suppose the second condition is not also fulfilled, then you will move on to the third point, that is supply of like, kind and quality. And suppose this point is not fulfilled again, then you will move on to the rule 30 and then rule 31. Let me give you a brief idea about rule 30. Rule 30 says that the valuation will be based on cost, which is cost of supply plus 10% markup. And the rule 5th, that is the 5th point, it tells about rule 31, which says that the value now will be determined by the GST officials and you have to just accept the value which is given by them. Now let me explain you rule 27 in detail. This rule becomes applicable when consideration is partly in money and partly in kind, or consideration is wholly in kind, or there is an exchange offer, that is barter system. Now for determining the transaction value, at first you will check out the open market value. If the open market value is available, then this will become your transaction value. Now suppose if the open market value is not available, then you will take the total of monetary consideration which you have received plus the value of non-monetary consideration. I will be explaining you this thing through an example. Now the third option which is available with you is the value of supply of goods or services, or both of like, kind and quality. That means if the same type of a quality, same kind of a quality product is being sold by some other seller, then you will take the selling price of that seller and that will become your transaction value. Now suppose if this point is also not available in the question, then the valuation will be determined as per rule 30. And again, if rule 30 information is not available, then you will move on to the last rule, which is rule 31. Now let us understand this through an example. Now suppose where a new phone is being supplied for rupees 20,000 along of an old phone, and if the price of new phone without exchange is 24,000, then the open market value will be deemed to be rupees 24,000. Because when you were purchasing a new phone, you have returned your old phone, and the value of that old phone was not available in the question, but the price of new phone without exchange was available, which was rupees 24,000. So this is the open market value. So you will take the open market value as the value of consideration. Now moving to the next example, which talks about the second situation, that the open market value is not available but the exchange price is available. So you will take the monetary value plus non-monetary value, that is where a laptop is supplied for 40,000 along with an exchange of printer, and the value of printer is rupees 4,000. So now the value of supply of laptop will be rupees 44,000. All right. Now moving to our next situation, which is value of supply between distinct and related persons. Now what does related persons means? Related persons means that you are members of the same family, or if it is a company, then it is again the holding company and subsidiary company, so they become the related persons. And what is distinct company? Distinct person. Distinct person denote that when an entity is having a branch in some other state, and due to regulation of GST, you are required to get both the units registered under the GST scenario, although the PAN number is same for both the premises. So now these two businesses which are located in different states will be considered as distinct persons. So a person who is under influence of another person, that is a related person, or if you are related to each other since the organization is using the same PAN number, that is distinct persons, then in that scenario rule 28 becomes applicable on you. Here price is the sole consideration and goods are not being intended for further sale, because if we would be talking about further sale, then some other rule will become applicable. So now in this situation, how you are going to calculate the value? Again, the first option is open market value. Then the second option is value of supply of like, kind and quality. Again, the points are similar to the rule 27 itself, just the second point has been eliminated. I am repeating again, in rule 27 we have talked about 5 points, that was open market value. Then the second point was monetary plus non-monetary consideration. The third one was like, kind and quality. The fourth one was rule 30 and then rule 31. So rule 28 is just similar to rule 27. It just eliminated the second point and the remaining 4 points are in the same sequence itself. That is, if the situation of related persons or distinct persons arises, then you will be taking the open market value. In case the open market value is not available, then you will take the value of supply of like, kind and quality. Again, if this figure is not available in the question, then you will move to rule 30, and if the information of rule 30 is not available, then you will move to rule 31, that is best judgment method, or you can say a residual method. Now, however, if the recipient is eligible for full input tax credit, then the invoice value will be deemed to be open market value only. Remember this thing. If the recipient is taking input tax credit, then the value of invoice will be deemed to be the open market value. And again, it has also been provided that when the goods being supplied are intended for further supply as such by the recipient, the value shall be at the option of supplier the amount equivalent to 90% of the price charged for supply of goods of like kind and quality by the recipient to his unrelated customer. So now what this point is trying to explain you, suppose there are three parties in the transaction. Suppose there are three companies like company X, company Y and company Z. Company A and company B, they both are related to each other, and company C is unrelated to company A and company B. So it is an unrelated party. Now company A sold some commodity to company B, and then the same commodity is being sold by company B to company C. Now we do not have the value between the transaction of company A and company B. So now how to calculate the value? But since we have the value at the price at which company B sold the same commodity to company C, we will be taking that value and we will be assuming that the transaction between the related parties was at 90% of the price charged for supply of goods of like kind and quality by recipient to his unrelated customer. So the value would be, if suppose the final sales was at rupees 5,000, so we will calculate the 90%, which comes out to be 4,500. So the selling price between A and B will be taken as rupees 4,500. In this manner, Rule 28 works. Now, moving to the next rule, which is Rule 29. Again, Rule 29 is somewhat similar to Rule 28. It says that in case suppose the first party and second party are in the relationship of principal and agent, and then the second party is selling to third party, which is an unrelated customer. Alright, then in that scenario, we will again be calculating the value as open market value or 90% of the final selling price, whichever is lower. So, for example, again, company A and company B, they are in the relationship of principal and agent, and then the agent is selling to company C, which is an unrelated party. Again, if the selling price is 5,000, so the 90% comes out to be 4,500. And suppose the transaction value between company A and company B is not available, since they are in the relationship of principal and agent. But suppose if the agent is purchasing the same commodity from some other seller and the open market value is available, then in that scenario, that value will be compared with rupees 4,500 and the lower figure will be taken into account. So, in this manner, Rule 29 works. Now, moving to the Rule 30, where you are unable to calculate the value as per Rule 27, 28 or 29, then in that scenario, you will be applying Rule 30. So, Rule 30 says that the cost of production or the manufacturing cost, the price at which the manufacturer is producing the commodity, you will take it at 110% to be the selling price. Since the selling price or open market value is not available, so you will be calculating your total cost and then you will be assuming as if you are selling the commodity at a profit margin of minimum 10%. So, it becomes your final selling price. And moving to the last rule, which is Rule 31, which says, now in case you are not able to calculate the manufacturing cost also, then in that case you can move to Rule 31, which is the residual method, or you can say the best judgment method, where you will be giving an application to the GST officials for determining the value. So, now by applying their own judgment, own mentality and their own thinking, they will consider your case and they will calculate the value. So, once they have calculated the value, that value will become the final transaction value in your situation. So, I am repeating and explaining you the entire rules again. We have covered from Rule 25 to Rule 27 to Rule 31. Rule 27 says where it is not possible to find out the total consideration value, then in that scenario you have 5 options. You can take the open market value. If the open market value is not available, then you will move on to the second step, which says total the monetary plus non-monetary consideration. If that figure is again not available, then you will move to the point 3, which says take the value of like, kind and quality. Again, if it is not available, then move to Rule 30 or move to the last point, which is Rule 31. Rule 28 says where value of supply of goods or services are between distinct or related persons, then you will be following the same sequence of Rule 27, just eliminating the second point, which is monetary plus non-monetary consideration. Now, in case where you were following Rule 28 and where you have found that when you were selling to your related or distinct party and then the distinct party is again selling to unrelated party, then in that situation you will be taking the 90% of the selling price of the unrelated party to be the value of consideration between the related or distinct parties. Moving to Rule 29, when the value of supply of goods are made or received through an agent, then in that situation the formula says the open market value or 90% of the price that is being charged from unrelated customers, whichever is lower. The Rule 30 says where the above valuation rules are not being used in a proper manner, then the valuation will be assumed to be 110% of your cost of production. And this is the last rule, Rule 31, which says where the above methods are not appropriate to be used in a proper manner, then you can take the assistance of the GST officials for determining the value of your taxable supply. So, in my next lecture, we would be talking about the remaining rules, which will begin from rule number 32 and will end on rule 35. Thank you.